Welcome to the deep dive. Today we're looking at something pretty significant happening in finance. Coinbase, the big crypto exchange, it's just been added to the S&P 500.
Yeah, and that's more than just a footnote. The S&P 500, that's the big leagues. We're talking 500 top U.S. companies, a major benchmark for the whole market. Getting in is tough.
Yeah.
It says something about your financial standing, your stability.
Exactly. And it feels like this sends, a much bigger message than just Coinbase did well. We've pulled together some analysis on this from Cointelegraph, CNBC, lots of expert views. Our mission today is really to unpack why this is such a big deal, what it means for crypto, for traditional finance, and what the ripple effects might be for you listening, even if crypto isn't really your thing.
Okay, let's dive in. Starting with Coinbase itself. I mean, their journey to this point, it's quite something, especially when you think about the regulatory headwinds they faced in the U.S.
Right. All the back and forth with the SEC, the CFTC, it hasn't exactly been smooth sailing, which is why Maryam Habibi from Paves said this is, quote, more than an achievement for Coinbase. It's a landmark for the broader crypto and blockchain industry. She even said it cements the legitimacy of an entire asset class. That's a strong statement.
It really is. And Jason Kennard at ARK Invest Europe at a key point. Coinbase is the first crypto-native company to actually meet the S&P's tough standards. We're talking profitability, liquidity, how easily the stock trades, market cap, all that stuff.
Right, the serious financial metrics.
Exactly. And Kennard thinks this sends a, quote, strong signal to institutional investors, basically that the plumbing behind crypto is growing up, becoming more reliable.
And here's a really interesting angle from Steve Sosnick at Interactive Brokers. He points out that if you're invested passively, say in an S&P 500 index fund and loads of people are using, you now own a piece of Coinbase, COIN. Whether you intended to get crypto exposure or not, it's just there.
Yeah, it's this huge, almost invisible mainstreaming effect, massive indirect adoption. And Mark Palmer from Benchmark notes the timing is, well, interesting, given Coinbase is still dealing with that SEC lawsuit over unregistered securities.
Right. It highlights the sort of tension, achieving mainstream validation while still navigating a pretty complex regulatory scene.
Absolutely. It's a dynamic space.
Okay, so let's dig into the mechanics. The impact of being in the S&P 500. We hear about passive investing driving things. Can you explain that a bit more?
Sure. So passive investing fundamentally is about tracking an index like the S&P 500. You've got these huge asset managers, BlackRock, Vanguard, State Street, the giants running massive index funds. Because Coinbase is now in the index, these funds automatically, almost robotically, have to buy Coinbase shares to match the index's makeup.
Got it. So it's less about active belief in Coinbase's future and more about just following the recipe for the index. And Maryam Habibi thinks this could mean billions pouring into Coinbase.
That's her estimate, yeah. Billions. Just from these passive funds needing to add it to their holdings. She even put a potential number on it. If Coinbase gets, say, a 0.1% weighting in the index, which seems plausible, that could translate to roughly $10 billion in new investment flowing in.
Wow, $10 billion, just automatically. That really shows the power of these index mechanisms. Habibi also mentioned this means indirect buy-in from big institutions, pension funds, maybe even sovereign wealth funds.
That's her point. It's embedding crypto via Coinbase into the fabric of very large, often conservative investment pools. And this ties into what Habibi calls the normalization effect. Her argument is that this normalizes crypto exposure in conservative portfolios that might otherwise avoid digital assets.
It's like crypto is sneaking onto the menu in places it wasn't allowed before.
Kind of, yeah. It lowers the barrier, makes it seem less exotic or risky, perhaps.
It does feel like a step towards crypto being seen as just another part of the financial system. Jason Kennard seemed to echo that, saying crypto infrastructure is now a credible, systemic part of the financial ecosystem. That's quite a shift.
It is. And Habibi thinks the market is rewarding that maturity now. Companies showing they can handle regulations, operate reliably, think long-term, that's what gets you noticed by the S&P committee and traditional investors.
Okay, so this leads to the obvious next question. Is Coinbase the first of many? Should we expect a flood of other crypto companies joining the S&P 500 now?
Well, opinions are a bit divided there. Russell Rhodes at Indiana University says, look, it makes sense for a crypto firm to be in there. The industry is becoming more economically significant, and the S&P 500 is meant to reflect the economy.
But there's always a but, right?
Right. He also adds a note of caution. Don't expect a sudden rush. He pointed out Coinbase replaced Discover Financial, another finance company. So it wasn't like they carved out a whole new crypto slot.
Ah, okay. It's more like a substitution within the existing structure.
Exactly. And you have to remember those strict rules we talked about. Consistent profits, big market cap, enough liquidity. Names like Marathon Digital, Riot, Strategy get mentioned a lot. But meeting all those criteria consistently, that's the hard part.
And So-Young Kim from Santa Clara University seems pretty doubtful about others joining soon.
Yeah, she really emphasizes how tough those requirements are to meet consistently for many crypto-native firms right now. Her view is it's actually more likely we'll see existing S&P 500 companies adding crypto services or using blockchain tech rather than a wave of new crypto firms getting listed.
That's an interesting angle. Integration from within rather than new entrants storming the gates.
Sort of. And Steve Sosnick agrees. He said he's basically not aware of any crypto-linked companies with sufficient market cap and consistent earnings that meet SPX criteria at this moment.
What about Galaxy Digital? They just listed on NASDAQ. Are they on the radar?
Kennard mentioned them, yes, but pointed out they still need to show that track record of consistent profitability. It's key.
And strategy. MSTR has a huge market cap, right?
It does, but Se-Young Kim highlighted their challenges with the earnings side of the requirements. Even private firms like Gemini, Kim thinks they seem far off based on valuation for potential S&P inclusion anytime soon.
Okay, so Coinbase is a big step, maybe a landmark, but perhaps not the opening of the floodgates just yet. Now, let's pivot slightly to this idea of convergence. Crypto and traditional finance, or TradFi as people call it. How are these two worlds interacting now? Are they merging, competing, coexisting?
Well, Miriam Habibi and Owen Lau at Oppenheimer are pretty clear. They think convergence is happening right now and will continue. Lau uses examples like Robinhood buying Bitstamp, Kraken acquiring NinjaTrader, Ripple working with Hidden Road. These deals show TradFi bringing crypto in, or crypto reaching into TradFi markets.
Tangible examples. And Jason Kennard seems to think the separation is basically over.
Yeah, he said we're definitely past the separation phase. He points to crypto ETFs, where Coinbase is often the custodian in Galaxy's NASDAQ listing. He argues TradFi firms are actively looking to crypto companies for their specialized tech and infrastructure.
But Steve Sosnick has a different take on what true convergence looks like.
A slightly different emphasis, yeah. He feels real convergence happens when TradFi widely adopts crypto for actual payments, like as a core function, not just an asset to trade or hold.
Okay, so using it as money, essentially, not just an investment.
Right. And Habibi gave some interesting examples on the infrastructure side, too.
Oh, yeah. Like what?
Like JP Morgan's Onyx platform using blockchain for repo transactions. That's big institutional plumbing. Also, NASDAQ getting into digital asset custody and PayPal launching its PYUSD stablecoin. That bridges a huge mainstream payment network with crypto tech.
So it's happening on multiple levels, not just companies, but the actual technology rails, too.
Exactly. Habibi sees it as a shift from pure competition towards co-evolution. Crypto firms adopt traditional structures for compliance. Banks explore decentralized tech for efficiency. Both sides are adapting.
Se-Young Kim had a slightly more cautious view on the pace, though.
She sees the near-term convergence more around institutions adopting blockchain protocols and tokenizing assets, putting real-world assets on a blockchain rather than a full-blown merger of the two systems immediately. More about using the tech within existing frameworks.
Okay, that makes sense. Pragmatic integration. Now, amidst all this big S&P news, there was also a separate, slightly concerning report about a Coinbase data breach. Can you touch on that briefly?
Yes, that surfaced recently. Reports of a breach involving compromised user credentials like passwords or keys. Potential losses were estimated anywhere from $180 million to $400 million. And it apparently exposed some users' personal info, which raises concerns about follow-on risks, kind of like we saw after the Ledger breach back in 2021.
Right. It's definitely a reminder that even as crypto gains mainstream legitimacy, the security challenges are still very real.
Absolutely. It underscores that operational security, protecting users, it's still paramount, especially as more traditional money potentially flows into the ecosystem via things like S&P inclusion. Maturation involves getting security right consistently.
Okay, so let's try and wrap this up. It feels clear that Coinbase joining the S&P 500 is, well, a genuinely big deal, a major nod towards mainstream acceptance, institutional involvement in crypto.
Definitely a significant milestone. It could channel a lot of passive investment into crypto via Coinbase stock, and it might smooth the path for more integration down the line, even if, as we discussed, A rush of other crypto firms into the S&P 500 isn't guaranteed soon. The bar is still high.
And it really highlights this ongoing dance between TradFi and crypto, this convergence or co-evolution we talked about.
It does. Both worlds are changing and influencing each other.
So, a final thought perhaps for you listening. How might this growing overlap between the old financial world and the new crypto world actually impact your own financial life, even if you don't own Bitcoin or Ether directly? What questions does Coinbase joining the S&P 500 raise about the future shape of finance and the economy? Definitely something worth pondering.